Hello everyone, let me introduce myself. My name is Ulfa Salsabila, NPM 253111040, Class SI 25B, Information Systems Study Program, Accounting Fundamentals course. Here I am presenting about adjustments. Adjusting journal entries are used to adjust general ledger balances that are not yet in accordance with the actual situation. The purpose of adjustments is to ensure that each real account, especially asset and liability accounts, shows the same amount at the end of the period. Each nominal account must show the revenue and expenses that should be recognized in a given period. Adjustment accounts 1. Supplies or consumables 2. Prepaid expenses 3. Unearned revenue 4. Accrued expenses 5. Accrued revenue 6. Depreciation of fixed assets 7. Bad debt losses 1. Supplies definition. Goods purchased by a company to support operations, but only expected to be used for a short period, usually less than 1 year. Recording. Initially purchased as an asset, equipment, and when used will be recognized as equipment expense. 2. Prepaid expenses definition. Payment in advance for goods or services to be consumed in a future accounting period. Recording. Recorded as a current asset on the balance sheet because the company has a future benefit and then becomes an expense when the benefit is received. 3. Unearned revenue definition. Cash received from customers before the company provides goods or services. Recording. Recorded as a liability because the company has an obligation to provide the goods/services in the future. 4. Accrued expenses definition. Expenses that have been incurred and become an obligation of the company, but the cash for which has not yet been paid. Recording. Recorded as an expense and as a liability in the period in which the expense is incurred, even if payment is made in a subsequent period. 5. Accrued revenue definition. Revenue that has been earned, for example, through the sale of goods or services, but for which payment has not yet been received in the same accounting period. Nature. It is an asset because the company has the right to receive the money in the future. 6. Depreciation of fixed assets definition. The systematic process of allocating the cost of a fixed asset, such as a building, machinery, or vehicle, over its useful life. Purpose. Matches the cost of the asset with the revenue generated from its use over time. 7. Bad debt expense definition. The expense incurred due to accounts receivable that are expected to be uncollectible from customers. Nature. This is an estimate made by the company based on previous experience and customer conditions. Purpose. Reflects the expected impact of losses from bad debts on the income statement.